Welcome back to my final daily report market analysis video on Wednesday the 8th of January with me, Richard Perry, market analyst at Hantech. Let's look at this gold chart now, which actually on a momentum basis at 87.88 on the RSI is the most overbought it has been since 1999. Incredible, actually. You actually have to go back even further than 20 years for this one, back to that 99 spike there on the RSI, which went into the 90s in September 99. And yeah, incredible move. So we have still seen upside today, and the spike higher early doors on the news of those Iranian airstrikes on US-controlled bases in Iraq has seen gold spiking to 1610. Now, there has been a significant unwinding since then, because suggestions are that, well, could this be the end of the sort of retaliatory attacks? Certainly would probably be the case if the US and Donald Trump decided not to respond to these with any further attacks of themselves. But we've been talking a bit in the last few days about how gold has been overbought and stretched and moving strongly higher, but with the risk of a sharp unwind. Now, I suppose, well, $30 from the high is already a sharp unwind, isn't it, by some degree, but certainly whether there is further unwind to go. 1557 was the old breakout. There's a gap at 1553. Still yet to be filled, and you'd be into the realms of unwinding back towards that sort of area at least, I think, if there were to be the retracement move. Now, I've also noted on the hourly chart, I've zoomed in here a bit too far, but you can see here the the bearish divergence on hourly RSI. It's only small on the hourly RSI, I might add, but also the MACD lines. Look at that MACD sell signal. The market has rolled over at 1595 as a marginal lower high on an intraday basis, but breaching back underneath 1582 with these bearish divergences on the hourly momentum indicators. Is that a signal to suggest that this is an exhaustion play, and there could well be now a corrective move? Now, the problem, I suppose, is how the US responds to this, and geopolitical tensions are still elevated at the moment, and there is a risk that US could respond in kind once more, and that would probably send gold higher once again. But if not, and the situation starts to calm down, I would expect to see gold starting to dissipate this run higher and retrace the move. 1557 would certainly be a ballpark area, and that is another sort of $30 or so back from where, sort of 1553, 1557, about $30 back from where we are now. So yeah, there is the capacity that this one could start to just slip back again, certainly with the overbought conditions that we do currently face. Gold is still very strong technically, you could argue, but it's very, very stretched. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.